it's laggy.
All right, we're live.
Hey, what's up, Facebook?
Live with DP. He and I have both
What's going
got the
on?
Corona cut.
Corona cut, baby. You look good. You look good. I like it.
Corona cut, baby.
I
We're
like
in.
it. I like it, man. I like it. Now you just need to grow the beard out. You got to
Right.
get
I
Corona
know
beard.
I had it grown out, but for some reason your beard grows out all nice and neat and long, and my beard looks messy.
Well, the secret, man, the secret is a hair straightener brush. It's not necessarily a beard straightener per se. They have some that they market, but I just went to Walmart. I don't know, bought a whatever it is, $20, and it's like a ceramic thing, and I brush it out, and it actually straightens it, man. And now I can't ever go back because now it looks like a mess if I don't do it.
Yeah, because I always get jealous of those beards. Like even my brother-in-law gets this big beard, and I'm always like, man, because I always get to that, I always grow it, and then I get to that point where I'm like, no, not good.
So, yeah.
And then mama takes the zzz.
Gone. She did a good job, man. Tell Cynthia she did an amazing job.
Yeah, she said this would save her money if I just did this every week.
Well, that's the problem now is now my wife doesn't want me to go back to the barbershop. And I'm like, wait, hold on a second. This is just for now.
Yeah, the kids are like, no, I want my hair back. Whatever. So it's cool.
I love it.
So what are you bringing to us today there, Senor Pavlik?
Listen, so first off, I want to give away a book today. So anyone that is interested in opting in for that free book, I've been giving these away. This book it's an awesome book. I'll drop a link to it. It's a #1 bestseller right now on Amazon in finance and business investing, stuff. You go look at it. He's one of my mentors, a friend of mine over the years. His name's Hans Johnson, and the name of the book is True Wealth Formula. So it's I want to give that book away to anyone that wants to opt in. I've been doing that on my weekly shows on Monday. So we do a financial show every Monday, and so I've been giving one away every week on that. All I ask is just go to my funnel page and opt in. So funnelwithdavid.com, and I'll drop the link in
David Pavlik giving away a free best selling finance book. Is called, what is it called? Best selling.
It is. It's an advice. Basically, what it boils down to is that it is a wealth building investment system, right? It's what system do you need to put in place to create something that will withstand the ups and downs that we're experiencing today. So I'm pretty excited about it.
Book, and then what'd you say? Sign up where?
So go to www.funnelwithdavid.com.
1L?
1L. And I'm dropping it too in the comments as well. Funnel with David's kind of, it's a sign up.
Boom. It's in the comments right now too.
Awesome. Yeah, it's a great book, man. It's a great book. And so, yeah, one of the things that I wanted to kind of just chat with your viewers about, and anyone that'll listen really, with all the ups and downs of the market, we work together in the real estate investment space. And even, real estate is going to have its challenges, and it's already starting a little bit. There's some challenges there. Obviously, investors are having challenges with, capital and access to capital and things of that nature. And I actually saw an article that came out, I want to say yesterday, maybe it was this morning. I can't remember. There's so many news reports that come out these days, but Wells Fargo, was it Wells Fargo? Yeah, I think so. Wells Fargo pulled their home equity line of credit program. Did you see that?
Really?
Yeah. So they're no longer doing HELOCs. They're no longer allowing people to pull money out of their homes at this point. And it's based on the volatility of the market. I mean, that's the reality. So the issue with that is that as lending constricts and as the parameters constrict, so on the investment side, obviously we saw 4 weeks ago really, that, on the lending side, all that money, not all of it, but, a good portion of that money, all the institutional stuff really dried up. So your longer term products, pretty much disappeared. That's not even really available anymore. And then the shorter term products, there's still some out there, but they've significantly reduced their LTVs and lending criteria and stuff. So it's a lot harder, more money down and less money that they're actually lending. So, that got really tight really quick. And so now we're seeing the ripple effect is now moving into the the traditional marketplace, right? Where now even it's cash outs, home and equity line of credits, or in our world, refi cash outs. That's the most riskiest form of a loan, right? Because you're pulling equity, pulling cash out of the property, and then the investor or the borrower really at that point can just turn around and walk away if they wanted to. So it's a high risk product. So yeah, that came out, I want to say last night or this morning.
Wow. So, so do you think that's going to be something that becomes a pattern?
I do. And we're seeing it across the board. More and more more and more banks are starting to reduce lines of credit are being reduced. There's already people reporting that like their credit cards have been cut, right? Their lines of credit on their credit cards have been cut, which is pretty typical. Again, it's the banks, the lending institutions, the banks are hedging against the risk of the greater fallout that is potentially projected to come. So as the market, as the economy continues to suffer the closures, the loss of revenue, and everything else, at the end of the day, the banks are mitigating their risk by pulling back. But when they pull back, they control the market now, right? So lending is what controls the market. And so, if we're in a good thriving market and houses are being sold and all this stuff's going on, that's happening because banks are lending. But if banks start to tighten their lending or pull back lending, that's going to start rippling into, how many houses can be sold, how many borrowers can actually get approved, and so on and so forth. So, as the news continues to kind of worsen as far as the economic perspective, there's going to be more and more banks that are going to they're going to pull back and they're going to try to mitigate the losses.
So, also, I wanted to ask you too about the cash out refis. I know that, excuse me, I know that banks are doing refis right now aggressively. They got great programs. Refis are going out.
Yep.
I've spoke to lenders. I mean, that's amazing. But
Right.
how about the cash out refis? When are we going to start to see them starting to kind of come to fruition again? What's the thought process there? I know banks are just trying to CYA and not give money out on something that they don't know what the value is really going to be here on the other side.
Yeah, so that's the thing is we don't know, right? The problem is that everyone's waiting to see what's going to happen. So, banks, companies, the economy can only sustain. Listen, when you look at the numbers, right? If you look at what's been going on over the last several weeks, and even if you just go over the several years, right? It's phenomenal. I was looking at some numbers on Monday with an analyst friend of mine, and we've added 80% of our debt in the last 23 years. So our debt at 23 trillion dollars, which is expected to rise even more. I was looking at these numbers. This is crazy, bro. Like, so end of 2019, we're at 23.3 trillion dollars, right? We've added 85%, actually 85% of that debt was added in the last 23 years. Now we just added in past stimulus packages that are going to add another $3 to $4 trillion already, right? So that in and of itself is insane. So by 2021, so by the end of the year, we'll be upwards above $27 trillion in debt. And so you're looking at an economy that can't sustain necessarily that level of debt. So financial institutions, banks, businesses are all looking at like they're using up their cash to be able to do things like Apple they just came out and are, it's a stock shell game, but they came out and said they're going to basically use up a good portion of their cash for stock buybacks. So, they do that as a play to try to boost their stock and maybe buy at a low. And then if their stock increases over the next several months or year, then they create more quote unquote liquidity on the books. But they're using up all their cash. Amazon released a report too that they're basically using up all their cash reserves as well, to sustain operations and sustain future growth and things of that nature. So, as all of those different factors start to come to fruition, yeah, there's huge opportunity for large organizations to fail and obviously significantly impact our economy. I mean, economists are already saying we're in a recession. The question is, do we enter a depression, right?
So do So we're getting ready to look at kind of phase one, right, of opening the country.
Right.
And so that's looking like just kind of some of the important, not that there's no business. I mean, I know every business is important to someone, right? But um, really the initial opening is giving the restaurant some love, right? Giving
Yeah.
some love, getting just kind of gradually getting people out and about, right?
Right.
Um, what is your opinion on all this? I know obviously the virus is very real. I mean, it is something that really happened. It wasn't a farce. It wasn't
Yeah, it's not
somebody making
exactly.
things up. Um, I know that over the last couple of weeks, we haven't heard as much about it. So that I think that's good. I think we're starting to see maybe it becoming part of everyday life and it's just kind of what it is.
Right.
Uh, I'm hoping that we're seeing a downtick of deaths and situations. So, what would I'm a little afraid that they're going to open the country and everybody and their mother is just going to hit the streets, and this is going to cause some sort of herd immunity, and it's not going to
Resurgence.
be good.
Mhm.
So, do you agree with that? Do you think people should gradually go out? Do you think still only go out cautiously?
Yeah, I mean, it's anyone that opines, right, at the end of the day is just, I mean, I'm here, I'm sitting behind quarantine behind my keyboard on Facebook, right, with you,
Right.
and it's a real difficult decision at the end of the day. But what appears to be is that, the is the cure worse, right, than the actual disease itself? That's been mentioned quite a few times, right? Is the cure worse? The reality is, financially, we can't sustain a continued closure of our economy. There's no way, right? Like, 90% of our GDP, so 90% of the gross domestic product. And I'm not a financial expert. I've just been studying like crazy, trying to like get with people that are smart on these topics and learn from them. But when I hear that 90% of our GDP is spending, right? 90% of our GDP is, like 20% of it, I want to say is like 10 to 15% of it is commercial spending, and then like the other 75% of it is actually consumer spending. Like, it's people going out and spending their paycheck, right? And people are not doing that right now. And then on top of that, you have millions upon millions upon millions of job losses. There are companies going out of bankrupt or going out of business. There are companies going bankrupt. That is going to significantly impact our GDP. So you're caught between like a catch-22. Like, if you don't open, there's only so long we can go without income. The government can't just keep printing money. I mean, they can, but
Well,
that's gonna have an impact,
that's
right?
another conversation, right?
That's a whole nother conversation. Yeah, just make it rain.
Yeah.
It's like, right, I got my
Hey,
check
can
this
you
month.
print a couple billion more, please?
Yeah. Just keep printing them. Like, so they there's one side that's like, yeah, we'll just keep doing it. Like, however many times we got to do this, we're going to keep doing this. Well, that's going to have a significant impact, potentially even on the value of the dollar, over the next 12 months. So that can't keep happening. So you've got to get businesses open, but then you have the issue of the virus. So I think we need to get back to work ASAP. And I think it's already in a way too late in a sense, because there's a ton of damage done. And the
But
reports are
is
coming.
it's correct to gradually open?
I mean, you have to take the precautions, right? Because you don't know. You
What
know,
do you think is going to come of like, so right now, I like that, keep restaurants at a certain capacity, right? Gradually open them up. Uh, Now, when we get to phase two or three and we start to see like the gyms and you know, the group companies that house large amounts of people open up, what kind of do you what's the question? There's going to have to be some of these commissions that come out and say you can't have 100 people at a time anymore in a room, or you can't. Do you think we're going to see changes that affect gym owners and business owners that were relying on large quantity of people in the same room training at the same time?
like, life as we know it has changed.
Does that make sense? Did I get the question
Yeah,
out correctly?
yeah. I mean, like, so what do you like? So your numbers, right? Your overhead and your numbers are based on a certain volume of sales, right? So if a restaurant has a max capacity, and they know that if their restaurant, it's like hotels, right? Hotels know that at a certain max capacity, we're breaking even. At a certain capacity, at a certain capacity, we're breaking even. Above that capacity, then we're making X amount, right? So you have to fill X, but if you can't do that anymore, right? So if a restaurant has to stay at an extended period at 25%, yeah, it's better than zero, right? So at least it's something. But now they're going to have to restructure their overhead to be able to become profitable at 25% capacity, 50% capacity.
And that was my next question I was going to ask you. Are we going to see I think we're not going to see a price competition because everybody's going to be kind of like, so if you have two restaurants that both have the same rules and requirements of 25% open,
Yeah.
and they serve kind of the same type of food, I can't imagine they're trying to undercut each other because now you can't really do that. So are we going to start to see where, maybe I went to this barbecue shop before and a family meal was $14.95. Is that family meal just now becoming $19.95 because we're at a lower capacity now these restaurants are going to have to charge more to be able to.
Right. I mean, it makes sense to me, right? Like at some point, someone's going to have to pay the bill. Even with everything that's going on with the government, right? With all this money printing, at some point, someone's going to have to pay the bill, right? Like all of these, bailouts and all of the money that's going to, whether it's states and, individuals, like there's going to be at some point a tax hit. Somebody has to make up for the difference. Like, it's just common economics, it's common math. So, yeah, I would say that there's definitely going to have to be a trickle effect into how much we pay for things. Across the board, things are going to go up. And, look, we're looking at supply chain disruptions and stuff in our, with our meat and our dairy. And like, there's all that reports stuff that's coming out now, right? That farms are having to dump, whether it's potatoes or, whatever it is, vegetables and stuff. So we're going to see an increase at the grocery store eventually.
I mean, even my wife, where she was seeing 25 patients a day, she even says, I'm not going to be able to see 25 patients a day again. I'm going to have to start out at seeing maybe 8 or 10.
Right.
And to see where it goes, she's probably not going to be allowed to have people just sitting in the waiting room in groups right now.
Yeah.
So, I mean, even that's going to be affected. So is that going to cause these doctors to say, okay, now a doctor's visit is X? The problem is you have the insurance companies. Are they going to start paying the doctor more, or are they going to continue to pay the doctor the only fee, which right. is kind of putting the doctor in a tough situation?
It's a ripple effect everywhere, right? At the end of the day. And so all I can do is I'm not an expert in any one of those topics, right? I don't know that anyone really is at this point, because this is unprecedented in the sense of what we're dealing with in our generation, right? None of us,
we haven't seen this before.
Right. None of us have lived through this, right? We can look at the data. There's been, pandemics before, right? There's been financial crashes before. I mean, if you look like Monday on my show on Monday, we did a comparison between, I think it was 1929 and now in 2020, right? And the numbers are the same. The peaks are the same. Like there's these issues, right? That show that right after we're going to see a significant crash. There's projections that the Dow is going to correct all the way back down to 5,000 or 6,000. Who knows? Like it's
you saw the show they just released on the coronavirus on Netflix?
No.
It's pretty cool. It's just like an hour-long documentary or something, and it really educated me pretty well. I think a lot of people that are screaming, this, that, and the other thing, just haven't educated themselves on what COVID really is. Yeah. And that, like I was reading, so SARS was the first COVID, and then you've got COVID-2 now, which is this. And it's crazy that there's like 7 different types of COVID. So coronavirus is just a type of virus, but it's involved in, like, even in the common cold has 35% of these little crowns. Right. So it's crazy how this one has affected us so greatly. But so let's say, so you've got the wealth management book coming out, or you have it out, you're going to get it out to these folks. So you're an investor. So we're coming out on the other end of this, right? So we've been quarantined for 45 days or whatever. we're starting next week. We're going to start to see us phase back into life. You're talking to an investor now, and they're ready to get back in and start to play with money. Are
Right.
you putting them on real estate? Are you putting them on Bitcoin? Are you putting them into the stock market? Are you putting them into meat? Or I mean, where are you guiding, or what advice would you give these investors right now?
Yeah.
Uh,
So,
this
and
other
that's
world?
the, yeah, for sure. And just disclaimer, I'm not, it is my opinion. I help, people out of the goodness of my heart. I'm not a certified wealth planner. I do not do wealth planning. I don't manage your money for you or anything like that. But if someone asks me, right, and says, "Hey, what's your opinion on these things?" First off, I would ask them, "Do you have a strategy for your wealth?" Right. And that's why I love this book, and I love what he created, what Hans created in this True Wealth Formula. Is it is a system. You have to remove, investors have to remove the emotion out of the investment process, right? And so having a wealth building system, and turning, and we had talked about the title of the show being the money quadrant, right? And so, there's different variations of this concept of the money quadrant, but do you understand the differences in these four different types of debts and assets? And what are these different debts and assets? And do you have a balance sheet for your home, for your, like, even if you're an individual, right? Like, I would more so, rather than, most people, and this is something that the author of this book says a lot, is most people are looking for the latest tip, right? They're looking for a tip. Do I buy this? Do I buy that? Like, oh, if I could buy this, it's going to go up tomorrow, I'm going to make X, right? Like, it's emotional, right? And at the end of the day, that is a BS form of investing. Yeah, you might get lucky. Yes, you might buy something today and it goes up tomorrow and you made a grand, 1,000, 100,000, whatever. But that is not a long-term investing system. That is not, that is not something that is going to sustain you long term. And so that's why I want to give this book away, to try to help investors. When I sit with people and look at it and say, what is your long-term investment goal? What is it going to take for you to be financially free? How much do you need per month? What is your lifestyle number, and what is your freedom number, right? Like, how much do you need to be free so that you are not controlled by ups and downs in the market? And then what is it going to take for you to live the lifestyle that you want to live, right? Those are the types of conversations that I try to direct my investors to. Is forget about the next tip. Yeah, there's money that you can play with, that you can buy low, sell high, that kind of stuff. Even flips. Flips is, doing flips in the market right now. It's very dangerous. Like, we're there, you can still do a flip. And if you do it and get in and out of it in time and you make a buck, then good on you. But there's going to be 1,000 guys that go out there and try to do it and get stuck and can't move their property, and they're going to lose their shirt, in their flipping game. So what is your investment system? What are the rules that you have set up that don't allow you to do certain things so that you don't lose the money? That's really what I'm trying to direct investors to think. I want people to think along those terms, not, do I go buy this stock or that stock or Bitcoin, or is it good to do a flip right now? No, if you don't have a system, it's a bad time to do anything. Like, you need to build a system for your wealth to make sure you don't lose your shirt and all these corrections.
Is that I guess I'm kind of the skeptic a little bit, right? We saw this huge Bitcoin thing happen years back, and it was like the end all be all. Car dealerships are going to take Bitcoin, and you can go buy whatever you want with Bitcoin. And then it
Yeah.
kind of, we never heard about it again, right? And
Yep.
then all of a sudden, this virus happened, and all these Bitcoin people are coming back out saying, "Hey,
Sure.
look, we have Bitcoin still, and it's still fine." So where do you, not to piss anybody off, but is this the real deal? Is it something that is just another uh, funnel of investing? Is it really a form of currency that is going to be
Oh yeah.
successful?
Yeah. I mean, listen, having a digital currency is where we're going, right? Like, it's happening. And the United States, I don't know if, I don't know if many people caught on that or heard. It was it was like a passing, it was like a passing kind of thought, if you will, that was released by the Fed, right? The Fed Reserve. And they even talked about a digital dollar, right? I don't know if you remember hearing that, but they mentioned that instead of sending checks to people, they were going to issue like a digital currency or digital coin, right? That people could go to an ATM and redeem that coin. That's, it didn't happen fast enough. They probably realized quickly they didn't have the infrastructure built for that. But yeah, I believe that we are moving to a digital currency at some point. That's just where we're naturally going to head. Bitcoin, I think the infrastructure was built. I think the big guys that are out there allowed the smaller guys to test it, and it kind of withstood the test of time. I mean, Bitcoin's at what? It's still at $8,600 per Bitcoin, right? On this digital, system on the blockchain, and there's projections, bro. There's some scary projections. There's some projections that Bitcoin can go to 100, 200, $300,000. So who knows if that's going to happen?
Per coin.
Per coin, per coin. So and keep an eye on it, because there's a process that happens every so many years. If you've studied Bitcoin at all and kind of the process, the way Bitcoin works is that these computers are running numbers, right? They're running algorithms, and they're trying to solve a code, a numerical code. And every time a computer solves a numerical code, there's, I think right now the payout, it's like a commission. You get like 12 Bitcoins every time a computer solves a code, right? And so every so many years, there's what's called a halving that happens. So they reduce the amount of commission that happens per Bitcoin. And so it's going to drop. So the next halving is this, I think it's this July is the next halving. So every time they do a halving, the price of Bitcoin jumps up, right? It goes up. So, it's expected that potentially this July, whether this is the major jump where it goes from, $8,000 to, 50,000, 100,000, but that's potentially, but it's all speculation, right? That is a speculative type of investment. That is not an investment strategy. I can take money if I have discretionary money that I can afford to walk away from. I would definitely buy some of that, right? I would definitely hold some of that, but I am not going to invest my life savings in Bitcoin. I'm going to have a strategy for overall investment.
Nice. So I kind of do some of these 10 question things. You've probably seen them on the wrestling where we ask like ice cream cake, birthday cake, and stuff like that.
Yeah.
But I got, so as far as money wise, I mean, I don't know, I would do something like, let's say you've got $100,000. Is it real estate? Is it the stock market? Is it Bitcoin?
Yes.
Yes. You got to pick one.
And
You'd go real estate.
well, I would say yes, right? I would figure out a way. I would take my 100,000 and I would leverage it and split it up in a way where I had some of each.
Some of each. That's awesome.
Because you got to diversify, right? Like, I don't want to give either the false hope or expectation or idea that I would agree in putting 100 grand in any one thing. If I had to pick one, right, I would pick something that I know is more secure, and I would probably go with real estate, right? Would you say real estate, Bitcoin, and what? Gold?
Stock market.
Oh, stock market. Yeah, definitely not stock market. I would do real estate or Bitcoin. If I had to pick one, I'd pick real estate. But in this case, I would say yes. I would, a diversified
It has
portfolio.
stood up the test of time, right?
I mean, it's a hard asset, right? I can go live in it. I can rent it out. I can sell it down the road. Like it's always going to come back up, or go down and come back up. So.
Well, I got to go clean out that one place. What's funny is I don't even have a key. I was never given a key or anything. I was just given a tenant and I got to figure out where to get the key and stuff. But I know that I guess I got to go clean it out. And then I was talking to my wife. I think that she's on the, I think she's leaning towards let's just rehab it and raise the rent.
Got it. Yeah, good.
So I think I don't need much. I think probably 10 grand would rehab it, put floors, fix some drywall, take care of the bathrooms, and
nice.
Go there. I think we could get it up to what, like 950? What was that area? I think we can get it.
I think you're around 950 or a grand, maybe somewhere around there. Yeah, for sure.
And I think you think the rental market is going to be on fire after this? People are unfortunately they're losing their real estate and having to go into homes, right?
Well, that's what happens, right? So once the market constricts, and if this is a downturn, and if it really truly shifts the real estate market into a decline, then access to buying properties is going to be it's going to be limited to a certain class, certain grouping of people with certain income or credit points and credit levels. And so then, yeah, more and more people are going to have to rent potentially. So if it shifts us into that, yes. Right now, it's still a buyer's market. Like people are still have access to with the government guaranteeing loans all day long, and they're like, yeah, we'll buy unlimited loans. Go for it. So the banks are like, yeah, go, like crazy. So we're not there yet. But if we head into a decline, people can't get access to funding for traditional purchases, then yeah, they're going to have to rent. Now, with that said, then there's going to be more rentals in the market. So, and the price of homes will start to drop and stuff. So, rents will level out. Rents in a lot of areas are like through the roof right now. So that will begin to level out. There'll be more rentals on the market, and rent prices will begin to reduce, right? The rental fees will begin to reduce a little bit and start to normalize. But there'll always be, there's always rents, passive rents are always the way to go, man.
Yeah. So, and I know that I still have the one tenant. She's awesome, man. I hope she stays forever. She's so cool. She's like, she's been home all this time. She's a teacher, or whatever. So she's fixing stuff up, gardening. She's sending me up, hey, I can get the screen and screen door fixed for $150. I'm like, fix it,
That's
So,
great.
so we're doing that. And well, as soon as she gets me paid, I'll get you paid. And then, yeah. And then, I'll figure out the other one. I still have to pay you on it, even though there's no one in it. So I'll get it figured out. And then I haven't heard from the lender in a while. He called me a couple weeks ago and told me what was going on. So I got to get with him.
Yeah, things are still pretty tight, but I know you were working on a couple different options on that. So, on the regular side, on the institutional side, if it's something especially that the government is backing, should still be able to go through on at least on a regular refi. You may or may not be able to do a refi cash out, depending on the bank, right? That's just Wells Fargo that stopped their home equity line of credit and some of that, but other banks are still doing it. They haven't come out, but it's probably a sign that that's coming, right? Like if Wells Fargo announced it, then chances are other banks are going to announce it as well, that they're going to start reducing the amount of cash that they're.
I mean, I remember going through being in the finance department in 07 in a car dealership. And I remember I was working a deal with I think it was Wells Fargo. I was on the phone with them, working a deal with them. And then I went out to talk to the customer, and I came back and I tried to call them back, and they closed down. Like,
oh, wow, just like
I
that.
couldn't get through. And then I reached out to the rep, and he's like, yeah, they just gave us all a call and fired us. They just closed Wells Fargo.
Yep.
On the lending side. And I was like, damn, just like that. And then we started to see that happen.
Yeah.
And now, of course, the banks have come back, and they're more, they're more strict, and they're doing things a better way. And of course, the public is saying we hate them, they stink, but they're just saying, hey, we're not letting you do the same thing to us again. We're gonna be very cautious. So I don't blame them.
Yeah, and people should try smaller banks. Go to your your credit unions and stuff like that, and your local banks and stuff. A lot of times it's easier and better to deal with those guys.
Yeah, they're those mom and pop banks, the local. That's cool, man. Hey, well, I know I haven't talked to you much all this week. I know we've been busy, and I've been doing these shows, so it's good to see you, man. I need to get on the phone with you though and talk some more business. So
yeah, let's do it. Call me after.
Through the other end of this, I really miss having breakfast over there at what was that place over in Lake Nona we would eat at?
You're not kidding. Yeah, I don't know.
Yeah,
sorry.
that place. And then I texted Desmond last night. He likes he loves the down home breakfast at Sweet Mama's.
Oh, Sweet Mama's. Oh.
So I was like, man, what would you do right now for that down home? He goes, oh, you have no idea. He sent me back. He was like, man, I'd give anything for a fried steak right now.
Yeah. Oh yeah. Yeah. It's crazy, man. It is. It's nuts. It is nuts.
Good, I'm glad to see you. I'm glad everything's all right. How's Junior doing?
It's good. He's doing all right.
You got him in the business already out there. I've got some leads that have come over. I'll text him. I need to get him on a Zoom call with me. Has he been sitting in the office?
No, sir.
No. Maybe I should reach out to Michaela. I might get.
We should tag. We're still live, right, on Facebook. We should tag them live and be like, look, we're live in front of the world and we're calling you out.
Yes. No, I feel like I should just get with his sister. I'm sure she would kill these leads.
She would kill it. Are you kidding me?
Yeah.
So she would absolutely kill it. No, but we have, like I mentioned to you, right? We have a team that is ready to rock and roll. So we actually have some people that will sit and bang out the phones. They're bilingual, English and Spanish. And one of the things that we're working on as well, just, we're in the industry, and as a supplementary thing, if you know of anyone, Dan, is we're willing to provide transaction coordination for anyone out there. So if anyone needs a transaction coordinator, we'll be happy to do a per file flat fee for any deals that they need TCing and stuff on. So whether it's investment or traditional real estate. So
let's talk. I know the weekend is no time for you to talk because you're with your prayer groups and stuff, but we'll talk next week and see what our schedules look like coming out the other end of this so we can get together.
sounds good. Looking forward to it.
All right, brother, man. Hey, good to see you.
All right, man. Hey, I'll send you a copy of this book, and anyone that's interested, funnelwithdavid.com, I'll get you a copy too.
All right, brother. You take it easy. Thanks.
Take care, brother. Thanks again.
Yep.